right, we've got some new wholesale inflation data that we're talking about this morning. The producer price index rose 0.7% for the month of August. The rise in this key economic indicator was driven up by the cost of energy, including gas.
So what does it all mean? We're joined now by Hope King. She's a senior business reporter for Axios. Good to see you, Hope. Well, help us break down what these numbers actually mean to Americans. We get a lot of these reports.
Yeah, good to see you as always. Thank you for having me on. And you're right. I mean, we get these every month and these are breadcrumbs. And, every time that we talk about it, I think it's important to just look at that bigger overall picture. And this uptick was not expected. This came in hotter than expected. We saw inflation numbers yesterday that also came in a little hotter than expected for this month of August that we're looking back on. And so what that tells us is that maybe that fight to bring inflation down isn't over, and maybe the Fed will have to do more. And they've said too that they will not take their foot off the brakes until they get the job done.
And then what about the unemployment claims? What are they looking like? They're up slightly. What does that tell us about the state of the labor market?
So we have these numbers that come out every week, and if you look at the actual 4-week moving average, which is a little bit less volatile, that number has actually fallen. So we're still seeing a strong jobs market, and I like to remind folks always that around this time of the year, we're going into the holiday season, which means that a lot of retailers will ramp up hiring for stores to make sure they're staffed properly. And so overall, we're still seeing stability there when it comes to layoffs, unexpected job losses. And we also, of course, got those strong job numbers as well a couple weeks ago. And so that all paints the same story for now.
So, typically kind of the rest of the world looks to see what's happening with the Fed, whether or not they're raising interest rates. But now I'm going to ask you about the European Central Bank deciding to raise rates. Now, Europe is in a different position than the U.S. for sure. But what sort of impact will this have on Europe? And, could we expect to see, I don't think the two are connected, but could we expect to see the Fed also, do the same next week?
Sure. I mean, I think a lot of analysts would say that the trajectory of inflation is going in the right direction, going down, and that is what the Fed wants to see. But as we've been talking about, over this year, they want to see really strong, sustained, momentum in that direction. And to your point, the central banks all think about their own economies independently. And I think for the U.S. very specifically, they don't want to take their foot off the brakes just yet. And especially when you see numbers like this morning with wholesale inflation coming in hotter than expected, that just gives another, data point for the Fed to think about as they look forward as to where prices might move for the rest of the year.
Yeah, it's a good reminder. It's a good reminder, too, when you talk about the holiday season. If we're spending now, then what's the likelihood of us slowing things down, for the next 4 months? It's probably unlikely. We're going to keep spending.
Yeah, definitely. And, I think one big thing to watch here with the strength of the consumer is whether or not consumers are going to be relying more on credit. We've seen those balances go up. We know student loan relief ends in October. So a lot of analysts are also expecting perhaps that our spending might be trimmed by the amount that some of us have to now pay off.
Right.
But, again, as we always talk about here, and I love talking about it with you, is just whether or not that demand will come in stronger than any obligations that we may have to pay off.
Yeah, that's a good reminder about the student loans, though. You should come on and we should talk about that, what the impact could be on the economy. Hope, thank you very much.
Absolutely. Thank you.